Imagine buying your first rental property without ever stepping into a bank. No W-2, no credit check, no begging the lender. Just you, a seller, and a signed deal. Sounds wild, right? Well, it's not. I'm going to teach you everything you need to know about seller financing. And it might just be the shortcut to real estate freedom. Before we jump in, please hit that subscribe button so I can make more videos like this. I appreciate it. And let's just get going. What is seller financing? A lot of times sellers become the bank. It's really that simple. You make monthly payments directly to the seller. They hold a mortgage. There's no bank approval. There's no traditional mortgage underwriting process. A lot of sellers that get tired of their properties and they have no mortgage on their properties themselves, they'll do a deal with a private investor. They may like you. They may want to give you a leg up, and that's the bottom line. Deal structures are very creative, and they're best for small multifamilies, small projects, maybe even a single family, but mostly multifamilies where the owner's been there for a long time. Here's 5 strategies you could use when you're doing seller financing. You have to have something down for most of them, 5 to 10% down, and you could negotiate the rest. Usually there's a 5-year to a 10-year note, and then you're going to refinance it. You could do interest-only payments so that you have a better cash flow. You have to be careful when you're doing interest-only because when you go to refinance, you have paid down no principal. So interest-only costs you less money up front, but at the end of the day, you're going to be paying more overall for the property. You could do a balloon strategy, so you do a amortization schedule, say over 30 years. So it's just like when you buy a house, the payments are going to be X dollars per month. And at the end of 5 years, you owe the rest as a balloon. With this strategy, you've paid some of the principal down. You could do a wraparound mortgage where the seller still has a mortgage and you wrap their loan into yours. It's a little advanced, but very powerful. And a lot of banks will not allow it. Some will. Believe it or not, I think FHA does. That's something you can check on. If you've ever used a wraparound mortgage, leave a comment below. Let me know, or let me know if you've tried this strategy successfully. You can do a hybrid lease option. So you can take over a property. Let's just say you're going to become the manager. You take care of it. You collect the rents. You fix things around the property. You're basically running property management, but you have the option to buy the property. So you get to run it, upgrade it, fix it, and you have a solid contract that allows you to buy it at a specific time in the future. Common mistakes that people get into when they're doing seller financing. They skip using an attorney. Please do not do this step. In our state, in Connecticut, you must use an attorney when you're buying residential, but when you're doing outside of the bank, there's no way to check. It's a few bucks that could save you tens of thousands. You want to make sure that you are looked out for it and your attorney is going to be the one to do that. Ignoring due diligence. Do the research. Again, the attorney comes in, they do the title search. They make sure there's no liens on the property. There's no other encumbrances on the property. Make sure the people are actually paying their rent. You want to do all that due diligence, and that's going to be a big thing that your attorney helps you with. Overpaying. This is where you might want to bring in a realtor or someone who has access to the comparables. You want to make sure that the property is valued at what you think it's valued. You can do a couple of things. You can pay somebody to do an appraisal of the property. It's a few bucks, but it goes a long way. That might be your safest bet, or you could do the comps like we do as we're creating a comparable analysis to sell someone's home. So the person selling it may or may not have, they just may have a number in their mind that they'd like to get for their property. But it's a good idea to make sure that you're buying something of value. You're not overpaying for it. Don't forget, there's going to be maintenance. There's going to be repairs. You're going to have only a specific amount of cash flow. So you have to weigh that. Is the cash flow enough to pay the mortgage? And just like you're buying a house, if the mortgage payment is going to be more than 50% of the cash flow of the rents coming in, you may fall short. So don't try to find a property that you're only paying 50% because you want to have extra money. You don't want to work for free and you want to have some money in your pocket. So 50% is a real safe number. Look, seller financing is a cheat code for new investors. It's how you start with little cash and no bank. Let's just say you're a service guy, you run your own small business and you don't have W-2 income. Banks don't like people that run small businesses for some reason. When it comes to loaning money, it's much more difficult. So this could be a good option for you. You could build generational wealth. There's nothing better to do if you're hands-on and you want to be a real estate investor. If you like these type of videos, please subscribe for more type of videos. The next thing we're going to do is look at one of my clients that did seller financing and became a multimillionaire. So watch for that video. Look forward to seeing you and have a great day.